Shopify stock chart will provide a good case study to illustrate candle charting and general price action during uncertain times. During the initial speculation of stock prices, when a company begins trading on the stock market, such as Shopify did in 2015, naturally open, close, low, and high prices of the first few days are spread out over a wide range due to this initial speculation. These are key ranges that influence stock price well into the future. This can be referred to as the IPO range. Taking the opening price of the very first candle reveals the IPO or initial public offering price of Shopify stock to be $28. Then, as usual, the closing price is also very important, especially for the very first day of trading, and we can use the low and high here of the first few weeks to broaden the IPO range. During this rapid rise, this one red candle on June 10th is normal due to the heavy resistance offered by the IPO price in this first initial upswing. These three candles form the minimum outline and criteria for a three methods rising, with the first and last candles being large green candles, and the single red candle in the middle forms the neutral to slightly bearish resting phase. This is the quickest form of a three methods rising and bullish continuation, with just three candles for the entire formation. A clear continuation for this early uptrend, as the three methods rising is immediately confirmed with a strong close above its high. This greatly increases the chances of establishing newer highs during the early stages of trading on the stock market. A rapid upward acceleration with increased volume as well, making for the strongest type of continuation, the three marching soldiers pattern. Large green real-bodied candles with clear gaps between them for a near vertical climb. This candle on June 15th has a longer upper wick, however it is still predominantly bullish. As usual, it will be less common for all candles on the chart to perfectly match theoretical diagrams all the time. As long as the general price action features are present, there can be some slight deviation from the proportions found on theoretical diagrams. This is especially true for the three marching soldiers pattern, where short-term volatility will lead to some candles having slightly longer wicks. A familiar sight, especially after such a rapid rise, that can be considered overextended in the short term. A likely downswing as an evening star forms when the current candle closes under the bearish star's low. The three marching soldiers and three black crows are rapid accelerations. Naturally, they are short-lived moves. That quickly leads to short-term overextension. So in this case, it's normal for the market to make a slight dip. As long as an upward reversal can form off a near support, a longer-term uptrend can continue to develop. Very normal volatility when drawn back into the IPO range. The overall sentiment is neutral to bullish because the lower 24 boundary was the site of strong rejection from this lower wick, which led to the recent upswing. At first, there was a minor delay when a flat lower range began. However, following a bearish move, there was a quick reversal back with a bullish engulfing. That was accelerated by three marching soldiers price action. It's not a strict three marching soldiers due to the minor overlap of the real body ranges. However, the result is the same, a rapid acceleration to this early uptrend. Also note the opposite occurred here with 3 black crows, finishing off the downtrend strongly. Clear gaps in between these candles. However, you can still see some minor deviation, some slightly longer lower and upper wicks. In the very short term in the intraday, there is still some weakness of this downtrend due to bearish weakness. That is shown by these lower wicks forming on the 28 and 31 levels, which is normal behavior seen before, where major levels don't produce upswings. However, a strong downtrend is still temporarily slowed down. They are definitely no bull hammers, however they show the same type of price action where the market tried to drive down below these levels, but there was a tendency to push back up, at least in the intraday, to close closer back up towards these significant levels. Another attempt into the 40s fails, leading to a strong downtrend that eventually breaches the 2411 boundary of the IPO range. As the market begins to recover, there is a familiar sight where there is a less strict interpretation of the 3 marching soldiers pattern, where there is minor overlap between the real body ranges of a strong row of green candles. Also, the 3 candles are not so identical to form a row of 3 green spinning tops in a bullish context. However, the important thing here is there is an increase in bullish price action to accelerate this developing uptrend, which serves as another reminder to focus more on general price action rather than finer details of strict theoretical candle diagrams. Not surprisingly, 31 still remains highly influential. In this case, it is presenting resistance. Bearish sentiment finally accelerates when there is general 3 black crows price action. Once again, there is discrepancy with the candles not being nearly identical, especially with this large candle on May 4th. Though there are clear gaps between the real bodies, which is a good indicator of strong bearish sentiment, strongly pushing the market lower. Not to be too repetitive, but it is a similar situation here, except in a bearish context where the general price action is more important than the criteria for an individual candle pattern. Sustained spikes in red selling volume help to keep the slide on a steep angle. This, combined with lower wick rejection at the still highly relevant 2568 level, forms strong bullish context that is accelerated by 3 marching soldiers price action that becomes even more bullish when there are increasing gaps between the real bodies of the green candles. This is close to the price action of a bearish kicking pattern. However, there is the minor discrepancy of the minor overlap between the real body ranges. But overall, the same general features are present, with the first green candle strongly continuing the bullish sentiment of the existing uptrend. There's even a small precursor as the upper wick is rejected on the established resistance here, and the next candle builds on that by opening and closing strongly lower to begin a more downward to neutral stance in the market. Normally, IPO stocks begin to have lower volatility after a full year of trading, as stocks begin to stabilize and develop clearer direction. In this case, Shopify stock price does still experience some volatility, but it is stabilizing overall with clear bullish direction that is helped with continuation patterns from this 3 marching soldiers to the 3 methods rising price action and even this large green candle, which is essentially the sum representation of any bullish continuation price action. If these candles are combined from these two continuations, they essentially form one large green candle like this one. Great examples of single large real body candles instead of three methods rising or three marching soldiers and their bearish counterparts. Even though they are disproportionately larger, they still show some upper wick rejection for the bearish context and lower wick rejection for the bullish context, which form part of the lower and upper portions of this developing range. Three methods falling in December. As would be expected, there is downward overextension coupled with this bullishly engulfed doji forms a sizable uptrend off the still relevant lower 90s to upper 80s support range. The three black crows into April and into August are great examples of extreme downward overextension. The drop in June is strong but comparatively weaker due to greater overlap between real body ranges. In the longer term, the lower 100s range forms a resting phase. 100 is a key boundary, especially for a stock like Shopify here, only having traded on the market for a few years at this point. Often, after passing 100 following an IPO, a stock can go on a strong uptrend as seen here. It is not a guarantee all newly listed stocks would have such a large uptrend, but 100 does often become a firm base after it is passed.